Hello, it's Thursday the 25th. I'm FX Blue and this is the market brief. So Boris was on yesterday. His talks with the EU Commission resulted in a truce over that threatened export ban of COVID-19 vaccinations. I guess they saw sense, realised that a vaccine war is in nobody's best interest. But the tentative agreement does now mean that the supply threat has been averted, certainly for the time being. It all served as a friendly reminder that mass vaccinations is the only real way to allow nations to lift lockdown and kick on enabling their economic activity. And the UK vaccination programme is still going great guns. We remain on course with Boris's timetable and confidence is growing. Confidence and excitement, to be fair. Next week the number of people who can meet in public or in a private garden increases to 6, and we plan to take advantage of that. Shout out to Chunky for hosting the first Friday Night Lads in I don't know how long. Too long for sure. Blaze up that fire pit, buddy, I'll bring the beers. Andy Haldane has been on. He's a real cheerleader in the expected surge of economic activity, and he continued talking up the underlying growth even once the initial spike flattens out. But despite all this good stuff, sterling is rather pinned back by a dominant dollar at the moment. Yesterday we fell to 136.75 and we open only slightly higher this morning. Against the euro we are holding up a little bit better. We're trading in a tight range around 115.80. Over in the US, durable goods orders fell by 1.1% in February, adding to a pretty disappointing month of data. It looks like they just all took a break ahead of the stimulus checks arriving, and that is likely to be the case for durable goods, as they are defined as more significant purchases. Powell and Yellen were on in Congress again. Powell remains convinced that the economy is reacting well to the stimulus and support they've put in place. He's committed to retaining an accommodative monetary policy until the pandemic has been beaten. That's to give the economy every chance to come back stronger. Confidence in the recovery is being shown in the dollar as well as advancing against sterling. As I mentioned, euro dollar was also driven down. We touched 118.10, a level not seen since last November. And in the Eurozone, the IFO Institute slashed its forecasts for German growth from 4.2 to 3.7%, citing the continued lockdown. This comes as Merkel looks likely to rescind her order that Germany should remain closed for Easter, going against the advice of science nerds and health officials. She seems more concerned that with the recovery and said her decision was made for economic rather than sentimental reasons. I've just got a barrier in front of me, I need to get off the air wheel. Is this going to be an appropriately controlled risk, or might this come back to bite her? Let me know what you think in the comments below. Always welcome your views. Right, rather unsavoury end to today, but do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.